Today we're going to go through a full trade start to finish. Right here we have a 30-minute opening range setup. And the first thing I'm going to do is check if we have time frame alignment. So I go to the 15-minute chart and I'm looking for a simple direction. I can see the 15-minute candle closed above the previous high, and that tells me buyers are currently in control. So now I drop into the 5-minute chart, and all I'm doing is waiting for a pivot to form so I can use that pivot to define my risk. Once the pivot gets formed and the high gets taken out, that's my trigger to enter. Before I even think about entering, I have to know if this trade makes sense at all. So first, I calculate my risk. My entry candle high is 396.11 and the low is 394.14. So that gives me a range of 1.97, and that's my risk per share. So $1.97 is how much I'm going to lose per share. Now I need to see if there's enough room for the next target. Instead of aiming for something unrealistic, I'm targeting the next logical pivot. And that just happens to line up with the previous 15-minute structure. So now I take the target, 398.13 minus my entry, 396.12. And that gives me 2.01 of potential upside. So now I compare the two. We do 2.01 divided by 1.97. That gives us about 1.02. So I have just over 1-to-1 risk to reward, and that's my minimum requirement. If it's not there, I don't take the trade. And now that I know that the trade qualifies, I move on to position sizing. And the account I'm going to be trading on is going to have 4 times leverage. So we have a $25,000 account, so we have $100,000 worth of buying power, but we're only going to be risking 1% of our cash value. So 1% of the $25,000 would be $250. So now I divide my total risk, 250 shares, by the risk per share, which is 1.97. That gives me about 126 shares. So realistically, I'm going to take 125 shares. That's going to keep my risk controlled no matter what happens. And now I'm ready to enter the trade. Within 10 minutes, price hit my 1-to-1 target. At that point, I'm not guessing. I already know what I'm doing. I sell half of my position and lock in profit. Now the rest of the trade is just management. There's a lot of different ways to manage trades, but for me, I use a simple 2-bar break. Keeps things objective and removes emotions. I'm not trying to predict the top. I'm just following structure. So I sit and let the trade work. Eventually, we do get a 2-bar break, and that's my signal to exit. The final candle closes at 406.30. So now I calculate the rest of my profit. 406.30 minus my entry at 396.12 gives me $10.18 per share. I still have 75 shares left, so 75 times 10.18 gives me about $763. Add that to the 150 I locked in earlier, and the trade comes out to roughly $913, all while risking $250. That's the key. I'm not trying to be right every time. I'm making sure that when I am right, I get paid more than when I lose. That's how you stay consistent. That's how you actually grow an account over time. This is the part most traders miss. It's not about finding the perfect trade. It's about controlling risk and letting the math work over time. I only risked $250 and I made over $900. That's not luck, that's pure structure. Spend a year with me and I can show you how we structure trades like this every single day.